Hello everyone and welcome to another educational video on CFD trading from TopFX. My name is Neil. Now in this video I'm going to talk about earnings season, quarterly earnings. First of all, earnings season, it's already here and it's a perfect time to explore how earning reports don't just affect stocks but ripple across other asset classes as well. So listen up. Quarter earning reports, especially from large corporations and industry leaders, can influence multiple asset classes beyond just the stock of the reporting company. And let me share with you how other markets are impacted. First, let's start with indices. Imagine a few tech giants like Apple, Microsoft, Amazon, Nvidia, and even Google have positive, strong earnings. Subsequently, all those mentioned are in the Nasdaq index. The aftermath would be a boost on the index and a reverse reaction should they all have negative results, meaning a sell of both the shares and the index. Furthermore, a rotation or a rearrangement of portfolio can be experienced. So in other words, if all these big guys show a good quarter earning, okay, the Nasdaq upside, the Nasdaq index would also have a positive return with increasing price and vice versa. Then we have currencies. Strong corporate earnings give out a positive sentiment, meaning higher confidence in the economy and in return potentially stronger currency of the economy. Also, strong earnings report, it's a boost in the currency strength and it can result in central bank decision to tighten up interest rate in order to avoid inflation. On the other hand, weak corporate earnings can result in a shift to more safe haven currencies such as the Swiss franc, the Japanese yen. In short, high volatility may be experienced in currency pairs. So again, in other words, imagine if from the country that the earning reports come out, if there is a majority that come out positive, then at the same time, it would also push the currency of that country and vice versa. Now, if that happens, it's also an indication or a nudge for the central bank to start observing inflation and change the monetary policy, increase or decrease the interest rate, depending on the reading. Now, with all that happening, we're more certain to experience volatility in the markets, and most people would shift into safe haven currencies, such as, like I said, the Swiss franc or the Japanese yen. Right after that, we have commodities. For commodities, let's start with the most popular, the most traded commodities. Gold, first and foremost, the safe haven asset. Weak earning reports can increase market uncertainty, driving investors into gold, shifting into gold. Conversely, strong earnings can lead to gold sell-off as a risk appetite increases. Now let's move on to oil. Positive earnings from manufacturing, transport, or energy companies suggest higher demand for oil, pushing prices up. Weak earnings suggest lower industrial activity, affecting oil demand negatively. And then industrial metals, copper, aluminum, steel, so on and so forth. Earning reports from construction, auto, and tech sectors impact demand for metal. A booming sector means higher metal prices. So, quarterly earning reports don't just impact stocks. They create a ripple effect. They touch upon all the other assets across, the financial markets. Like I said, like in currencies, in commodities, even in bonds, and even crypto. Understanding these relationships helps traders anticipate market movements and hedge against risk. In essence, quarterly earnings provide critical insights that can drive market sentiment and influence trading decisions across varied asset classes. Now, if you enjoyed this video, if you found this video helpful, make sure you hit the like and subscribe for more. And don't forget to follow us on Instagram and on TikTok. Once again, my name is Neil from TopFX. See you soon.